Hey guys, welcome back to the channel. In this video, I'm going to go over why I won't go all in on WPAY and what I think the all in crowd might be missing this time to hopefully help you think further out the next week's distribution. As always, don't forget to smash that like button and share this video if you like this type of content so the algo gods know that I'm here. Hit subscribe if you're new so you're alert every time I publish a new video about stocks, investing, finance, and news. But before I get started, a quick disclaimer, like always, none of this is financial advice and you should always consult a licensed professional. With that out of the way, guys, let's get into it. Okay, so this video, my goal is to present a bear case against WPAY. All right, I know that's going to be kind of new because I usually don't do these types of videos, but I want to present a bear case of why I wouldn't go all in on this ETF. There's a lot of hoopla around weekly this WPAY ETF, and of course there would be, uncapped upside, high distribution rate, etc. Right, but we've seen this circus before, right? We've seen this movie before. A lot of YouTube videos come out and they all start talking about going all in on Ulti, all in on Misty, and then a couple months later, everyone is getting out, right? I sold Ulti, I sold Misty, right? You read the comment sections, they're just horrible. You can go on Reddit, you see everyone freaking out and selling out like crazy, right? So I firmly believe that this ETF will be no different. Okay, while I do think it is a great ETF, as a matter of fact, just for transparency and for people who might be new to the channel, I own a very sizable position in WPAY. All right, this is my live portfolio, as you guys can see, no screenshots here, but this is my live portfolio for WPAY. I have about $95,000 in this ETF. Okay, so I know, or at least I'm trying to approach this from a different angle of just feeding a bunch of hopium and copium and feel good positive vibes, okay? Because I really do think there is a huge risk with this ETF that people are overlooking. It does really well in an uptrending market. But what happens if we hit a sharp correction or a sharp bear market, right? And I know there will be people out there, well, I'll just sell out of it just in time before I take any losses, right? As if we could time the market perfectly. So I just want to present this video of what could potentially happen next year if people are not paying attention and how this will affect WPAY and why I wouldn't go all in on WPAY. So let's listen in.
I won't give away all.
And sorry, I forgot to put this out there, but this is Mark Newton. All right. He is a technical strategist at Fundstrat. You guys know who Fundstrat is. Fundstrat is headed by Tom Lee. They run the Granny Shots ETF. The Granny Shots ETF has outperformed the S&P 500. Okay. So let's listen in on what his thoughts are for 2026.
All my secrets of 2026. And there still is a couple months that are very important before we truly make that call. I will say that next year is a midterm election year. And historically, that's been the worst of all 4 years of the cycle. The market's also been up 20%, 20%. We're up 13. If we finish this year on a high note, 3 years of 20% heading into next year, I think the market's overdue for probably a 15 to potentially 20% correction. But I don't sense that it's going to be a bear market that leads to a recession. I think it'll be a temporary pullback that likely lasts the first 6 months of next year. And then we're going to have a rally and things will be fine. Now, that's my...
Again, this is just his thoughts on what could potentially happen or play out in 2026. Of course, nobody has a crystal ball. Nobody can predict this with 100%. All right, so how would this actually affect WPAY if we were to have a sharp correction, right? A 15, 20, or even a 30% drop. Okay, well, let's look at a couple examples. Now, I have been investing in NVDW and PLTW for a long time. You guys can see these two videos, they're 7 months old. All right, I hopped into these two ETFs, so I'm very familiar with this thing called volatility decay or volatility drag, right? These are two things, or this is the same thing really, that is going to impact the performance of these leveraged funds from Roundhill. Okay, so you have to respect that there are risks with this. It's not just quote unquote uncapped upside forever. No, if there's pullbacks and drawdowns, that plays against the total performance of WPAY or these leveraged ETFs. So how do I know this? Let's look at PLTW. Okay, so we'll look at year to date. You guys see that from here, it really launched at about $50, right? And then it just dropped on news because Alex Karp was selling his shares. The DoD was doing budget cuts, and then we had Liberation Day, right? So this did very poorly on inception. But look, it was down $25, and it has not reached its inception price. All right. It took a lot for it to even get back to 50. When Palantir reached its all-time highs, that's when the Roundhill Palantir Weekly Pay ETF PLTW reached its all-time highs. But let's look at what happened, in the preceding, couple of weeks, the months. This thing dropped and it looks like it's been trading flat. You see these sharp declines that I'm showing you on screen. This is going to be the perfect illustration for volatility drag on performance. Okay. So we have these really sharp declines. It resets every single week, right? The leverage, it resets every single week. And look at this. Now let's look at Palantir, the stock. All right. it's almost near its all-time highs again. Okay, its all-time highs was about $186, $187, and right now we're hovering at $184. So why isn't PLTW reaching that? And that is because of the volatility drag and the weekly resets that this does. So you have to keep that in mind. If we were to have these sharp declines, something like WPAY is going to feel the full force of that, plus additional, because of the leverage. All right, so if we were to have these sharp declines, this ETF would actually struggle to climb back up. So it does have uncapped upside, sort of, okay? And that's only if we are trending up with almost no sharp declines, no sharp rebounds, nothing like that, okay? That is why I wouldn't go in all in on WPAY. I think a lot of people are going to learn this come 2026. Maybe it might even happen this year, where they're going to realize that there is, some weakness with these leverage products. There is some weakness with WPAY. Okay. And even though it's spitting out this really high distribution rate, which is, mouthwatering. I know a lot of people, just are foaming at the mouth like, holy cow, the distribution rate's super high. But just know it's never always going to be this way. Okay. If we were to hit a prolonged bear market or a sharp decline for a couple of weeks, that distribution rate is probably going to fall because all the distribution rates in the ETFs in this basket is going to drop as well. Okay, so let's look at something real fast. So I pulled this from Seeking Alpha, okay, and this is just price return. All right, we'll look at total return because I know people are going to ask about that, but let's look at this, okay? So this is over the last month. And we could see that WPAY was absolutely crushing it for a little while. And then we had these sharp sell-offs. Okay, first one was because Oracle had reported that, they're missing the mark on margins. They're not making enough money. So then we had a sell-off. And then, we had, just some more bad news and then more bad news and then more of a sell-off, right? And it just kept going down and down and down. This is where you're going to see that volatility drag. This sharp decline is going to make it so much harder for this ETF to outperform VOO, something like a simple index. And if you guys can see plainly, VOO which is just a standard vanilla S&P 500, kind of just hovered in this range. It really didn't get impacted too much by these large sell-offs. So again, WPAY, if we have these really bad, awful swings, this is going to impact the total performance of this ETF. Now, again, this is just price return. All right, I know people are going to say, well, you got to factor in total return. Yeah, the same thing could be said for Alti, okay? Alti has actually outperformed on a total return basis over the S&P 500 by a wide margin, a very wide margin. But of course, people don't look at that. They look at the price return, they look at the NAV erosion, et cetera, right? So again, if we're going to be, comparing things like this, just keep that in mind. You can't say that for one and not the other. Okay. So yes, right now it looks good. And that is if you are reinvesting your dividend back into WPAY. This is how you would outperform. But of course, I know a lot of people are using that distribution for the most part and probably, using it to either pay for expenses or they're using it to invest in other different ETFs or other different stocks. Okay. So again, this is just my thoughts on why I would never go all in on something like a WPAY. I mean, it is mouthwatering, especially given my portfolio size. If I just cashed out of everything right now and dropped it all into WPAY and I'm getting these really, really nice distribution rates, but I know that there's risks inherent with these ETFs, okay? While it is nice that it doesn't have, the capped upside compared to its covered call counterparts, there is still risks associated with this. Okay, so I hope this video, it's very short. I just wanted to at least, provide my perspective on this because I'm seeing way too many videos come out now where they're talking about going all in on this ETF. They're selling out of everything. People are doing the same nonsense where they're, taking loans, taking margin, going all in on WPAY, and it's the same circus, right? It's the same show, the same movie we've seen time and time again where people will go all in on something and then a couple of months they will sell out at huge losses. So again, just practice risk management. Diversification is still a thing, right? You could still diversify. If you're in margin, this would be a very, very spicy ETF to have, and you have to really, really consider risk management. All right, so anyways, guys, I just wanted to present my case. That's it. All right, don't flame me too hard in the comment section. Hope you guys had a great day. I will see you in the next video. Take care.